So China's retaliation isn't over yet, and here's an update on America's trade war, which isn't going well. Over the last several days, Beijing has imposed broad economic sanctions on the United States. We've passed the point of tariffs. Yes, a 10% import tariff on U.S. LNG will be detrimental, but China isn't stopping there. They are now weaponizing their supply networks and denying Washington access to crucial metals. Trump's proposal to reshore U.S. industry has come under assault. China has put more export curbs on the United States, this time focusing on tungsten, which is particularly important in weapons development. Companies in the United States are frightened because they did not anticipate China to respond in this manner. Tungsten is widely utilized across the U.S. economy. You require it for wiring, electrodes, welding, and heating. It is one of the world's strongest metals, so it is required by all industries, including mining and building. That is why China is attempting to cut supplies to the United States. This is a key mineral, with Chinese sources accounting for the majority of world output. By restricting supplies, U.S. corporations will find sourcing it very hard. Here's why China's prohibition is so concerning. They produced more than 67,000 tons of tungsten in 2024, the most of any country in the world. They also have the largest deposits of the metal. Russia, China, and North Korea account for around 90% of world tungsten output. And how much does the U.S. have? Now, I'm not kidding. The United States produced 0 tons of tungsten last year. So obviously, everything must be imported into the country. However, the bulk of suppliers are either members of BRICS, are anti-U.S., or are close buddies with China. So there's a tremendous geopolitical concern as well. Now, Trump's trade war has exacerbated the problem. The metal is not just employed in weapons and military applications. You also need it to produce semiconductors. Companies such as NVIDIA and TSMC use tungsten to create their chips. And where do they acquire their supplies? They most likely acquire it from Chinese sources. The U.S. is frantically seeking to establish its own tungsten supply chain. In December, they gave a Canadian firm $16 million to begin mining the material. This is where Trump's trade war complicates everything. Where is the mine located? It is located in Yukon, Canada. And which nation has the U.S. lately tariffed? It is Canada. The degree of decision-making in Washington is quite odd. Why would you tax your neighbor whom you rely on for that crucial metal? Aside from tungsten, China has prohibited a ton of rare earth shipments to the United States. These are perhaps more hazardous than Beijing shutting off U.S. LNG. These limitations would cripple American manufacturing, especially because Trump wants to bring chip production back to the U.S. The United States is already experiencing a tsunami of rising expenditures. Bond yields are high, which raises borrowing costs. Canada is preparing to shift all exports to China. The majority of U.S. energy imports are at risk. Trump's reshoring proposal will also face criticism for limiting rare earth supplies to the United States, which is explained below. In addition to gallium and germanium, China has prohibited other essential metal shipments. This contains bismuth, which is employed in atomic research. China holds 80% of the market. Tellurium is utilized in solar cells and memory chips. China controls 3/4 of refined output. In addition, molybdenum is employed as a catalyst in the oil sector and in steel alloys. China accounts for 40% of world output, 3 times more than the United States last year. An economic war has several dimensions. So yet, Trump cannot look past his 10% tax on China. But the Chinese are hammering the U.S. from all sides, not just headshots, but also body punches, demonstrating the strength of global supply systems. Now they take a long time to create and require trillions of dollars in investment. This is where China invests its trade surplus. This is a major reason why waging a trade war with China will be extremely unpleasant. Even if all of China's assets are sanctioned, establishing a supply network will take time. China currently controls 2/3 of worldwide rare earth production, with an annual growth rate of 10%. While the United States uses its Navy and the dollar to conduct diplomacy, China plays a whole different game. Beijing is using the resource card as a retaliatory tactic. If you partner with us, you will have access to all of these metals for your economy and military, but if you don't, we'll practically starve your industrial industry. We will demolish your industries. You won't be able to construct automobiles, ships, or missiles at a reasonable cost. The tale for Trump's economy is only going worse, because there is a limit to how far you can push Canada. Calling Canada the 51st state of the United States and making fun of it every day will elicit backlash. And now, the Canadians are up in arms. They want their country to diversify commerce away from the United States. Canadian support for sea-to-sea pipelines approaches 80% across all provinces. This includes developing supply lines from the oil and gas fields to both the western and eastern coasts. Now, by delivering electricity to the eastern coast, Canada can sell energy to Europe, which is in difficulty. Countries like Germany are experiencing an energy crisis. Therefore, they will pay more for oil and gas. By developing pipelines to the west, Canada may begin supplying Asian countries like China. The Chinese will now be keen buyers since their businesses require power. They can't wait to be free from U.S. oil as well. And regardless of how things turn out, Canada will profit far more than the United States. Yes, there is an established pipeline network connecting U.S. refineries. Yes, it is simple to sell oil to the United States. There are several connectors and pipes accessible. However, counting on it is short-sighted and will backfire on Canada. If you don't, you will hear this every month. However, the United States is currently in the discovery phase of tariffs, similar to how Canada is preparing to sell oil to Beijing. They are now seeking new buyers for their gas output. Amid U.S. tariff threats, Canada is now looking to Japan for additional LNG. Asian countries, particularly Japan, need to reduce energy costs. Japan now imports tons of LNG. It accounts for 30% of their whole energy production, and they are presently purchasing a lot of US LNG, which is quite costly. Consider what Japan is currently experiencing. They might face tariffs from the United States, and China is their largest industrial rival in Asia. In order to survive, they must reduce their production costs. And here is where Canada comes in. Canada now has the potential to export LNG throughout the world, and the time is ideal. By the middle of 2025, they will be able to transport their first load. In addition, they may export up to 40 million tons of LNG each year. This is a significant sum, given that Canada did not have a large export facility a few years ago. Everything now relies on the price. Countries such as Japan, Southeast Asia, and in particular China are extremely realistic customers. Does Canada have a pricing edge over the United States? Apparently they do. In 2024, gas prices in Canada were trading at a low of 30 cents per million BTU. That is 3 times less than U.S. pricing in the Northwest. So, if it came down to a pricing war, Canada would probably prevail. Selling LNG is a considerably more profitable enterprise, particularly when sold to Japan. The margins are higher, and you will have a large client base with a high demand for gas. Over the previous few years, Japan has imported more than 60 million tons of LNG yearly, so they could really absorb the whole amount exported by the LNG Canada project. The Canadians actually have the advantage here. Let us pose a simple inquiry. Why is Canadian gasoline so cheap? It's all about supply and demand. If you only have one customer, you have no bargaining power. You accept any price you can get from the Americans. Canada is America's largest natural gas supplier. 99% of all U.S. natural gas imports originate from the north. So the reliance is genuine. It's great here. Since 2021, the United States has stopped importing natural gas from Canada. Why? Because the price is that low. It wouldn't surprise me if they bought inexpensive Canadian commodities, repackaged them into LNG, and sent them to the rest of the globe for a large profit. That is exactly what I would do if I were in the United States. After all, I am Canada's largest and only buyer, so I can do whatever I want. It's like India purchasing cheap Russian oil and reselling it to Europe. It's the same thing. But this time, the US is sucking Canada dry at a significant discount. However, the tables are beginning to turn. If Canada can expand its LNG export facilities, it may make a lot of money. They can fight with the US not only for Japan's market, but for the most profitable market available. I'm, of course, speaking to the Eurozone. LNG shipments began in 2022 and extended all the way to the EU. US LNG producers diverted flows to Europe because the EU was paying exorbitant prices. Germany does not have nuclear power. Cheap Russian gas has vanished, and the EU wants to prohibit Russian LNG as well. Canada has a strong competitive advantage in this market. They can grab market share from the United States. No one is preventing them. And if that occurs, Trump's aim to become a worldwide LNG exporting behemoth would fail. The funny thing is, the Canadians would never have thought of doing this in the first place. However, the risk is now real. Again, these are the results of a trade war. You don't simply have to worry about counter-terrorists. There are second-order impacts to consider. Now, I hope Canada does this, or they will continue to be strung along. Trump will keep pressing for further concessions. This is not good news for the United States. There are several LNG export projects being proposed. The U.S. intends to triple its LNG export capacity by 2028. However, if their neighbors begin to export their own gas at a lower cost, these projects will fail. We may even see the U.S. oil and gas industry decline. This poses a major threat. Trump overlooked that Canada is also a major energy producer in its own way. So hold on, people. Things are getting heated, and the trade war ramifications are piling up. The United States has overextended itself. But tell me what you think. What is China's next retaliatory move? And will Canada begin to take market share from the United States? Please let me know in the comments below. Stay safe, like, and subscribe as we traverse these tumultuous times.